Welcome back to the Multifamily Investor Playbook. I'm your host, Mark Faris, with my co-host, John Makarewicz. So, John, what is the fastest growing renter demographic that's in America today? What do you think that is?
Interestingly, Mark, I think most people would think it's Gen Z or the millennials, but guess what? They'd be very wrong.
Yeah. Yeah, it's interesting, right? Baby
Yeah.
boomers. Baby boomers are the fastest growing renter demographic, which just so you, if you're not sure of the exact age, that's between 62 and 80. So it's like these are seniors that are growing at a rapid pace. What they're doing, they're actually selling. They have a lot of equity in their homes and they're actually selling their single family property and they're banking all that equity. And what they're doing is they're renting. So
Yeah.
the renter demographic is actually growing in the baby boomer space, which is really interesting. You would never think of that as being the fastest growing renter demographic that's out there in America today.
Yeah, no, that's right. And it's interesting because they've actually delayed that process of selling those single family homes. So, in other words, a lot of you as listeners will know that Mark has the Ferris team, a large real estate company up in Canada. And I was previously with Mark Spain Real Estate in the US. And Mark, there was always this idea, kind of coming out of the Great Recession. Well, gosh, all those baby boomers are going to start selling their homes and that'll free up inventory. But that didn't happen. And so there was sort of this delayed reaction. But to your point, all this equity's built up now with home value skyrocketing. And so we're starting to see that transition occur. And so, once again, it's not something a lot of people would guess, but we see it at our properties. We're seeing a lot of folks that are moving to markets like Charleston and Atlanta, where there's culture and an affordable sort of cost of living combined with good climate, right? Tampa would be another great example. Just really the southeastern Sunbelt is very attractive for a lot of those reasons. So, at the end of the day, 10,000 people, 10,000 baby boomers turn 65 every single day. And that continues all the way through 2030. So, it's just a really interesting, statistic that I think would be surprising to a lot of folks.
For sure. And it's interesting because when you start seeing the shifts in the marketplace, then you can make better investing decisions as to which types of assets, which areas, and to know who to market to when you have these larger assets as well. So, knowing that you can actually position and purchase ahead of time to be able to get a better overall return, knowing who the renter demographic is at the end of the day.
Yeah. And so why are they choosing to rent this kind of cohort of baby boomers? Well, at the same time as their home values went up dramatically, the cost of buying a new home, right, went up as well. And so with home prices up 54% in the United States over the last 5 years, a lot of these boomers are sitting on that massive equity and they're choosing to sell and pocket that equity versus just dumping that into another property, right? And so the cost of home ownership in the U.S. is 3 times higher than the average apartment rent as where we sit in late 2025. We're recording this in early 2026. So, it's really this sort of like perfect storm where they've got all this equity, but they want to be able to use that equity to live a nice lifestyle and not just put it into the next house, right? And of course, you got mortgage, the interest rates are higher. So, another factor, right? Boomers want the freedom, right? They've worked hard their whole life and it's like they don't want to deal with maintenances or lawn care or property taxes and HOA headaches, right? So they want walkability, amenities, community, and flexibility. So 86% of seniors today are reporting wanting to remain in their homes as long as possible. And home increasingly means a well-run apartment complex.
Yeah. And so they have, like, these guys are well off. And so they have money to spend, but they want that first class service. They want to be treated well. Like they've earned it through the years. And so this aligns so well with our mission to go full out for residents, provide the best living experience in the world. And so they really appreciate this next level service. And they don't, because they've owned their home for so many years, when they're coming into the rental space, they want to pick a community that's going to treat them well instead of, just like another renter.
Yeah.
And I think that's where the thesis that we have with our investment properties and the assets that we're going after and the portfolio that we have, it's aligning really well with this huge market shift. And it is a wave of renters that are hitting the market. And it's not what you would typically think it would be.
Yeah, that's it. So, In terms of that, right? Like, so we kind of have, in a sense, two cohorts of renters, but with one asset class, and that's what is so beautiful about what we do, where we buy these, buildings that are in great condition in great areas, but just maybe need a little TLC, right? Perhaps even just it's a management challenge, right? Which is something we often look for. In a perfect world, a deal we're taking down has bad reviews on Google, right? So we know we can fix that one because that doesn't really cost any money. That just is a focus on hiring the right people and then implementing our training and culture, which we've proven time and again we can do. But occasionally we find a deal that's super well managed and has great reviews, right? I mean, our Georgetown property was a great example of that. Now, I'm pretty proud to report, Mark, that since we've taken over, in the past 2 months, we've gotten 20 plus 5-star reviews from residents. So, we're still marching down that path and trying to even exceed what was already a good experience. But, when we come in and we've taken that property, and Georgetown's such a great example of this, it is an actual, like, largely boomer demographic in that building, in that community. And, the feedback we keep getting of, residents that were there prior to our takeover, the idea that their maintenance items are taken care of within 24 to 48 hours, the fact that we've completely overhauled the entire exterior from the parking lots to the roofs and everything in between. That is so exciting for them. And so that's the feedback we're getting. And what that allows us to do is push our rents in such a way where we're creating really meaningful value for our investors. So, at Georgetown, just the same, we also have some young family, right, renters, right, like residents. So, now we have two cohorts, young renters and downsizing boomers. So for operators like us that are targeting these Class B assets, it's really an opportunity that you should not overlook. And you should absolutely be not only your marketing, but, just how you're hiring the property managers and kind of the level of service you're providing is so critical here. Because I will say boomers have a higher expectation in a lot of those areas, right? And we already have high expectations for ourselves, but we have to deliver.
Hmm. Yeah, and if they're really liking where they're living, they're more open to these rent increases if they're receiving value. And I think
Mhm.
that's really important. Same with renewal rates is like when they go in or renewals leases. So on their 1 year renewal, there's a higher likelihood of them signing on as well because if they're treated really well and they really like the community, there's it's tough to make a move, right? They don't want to keep making move. They've been at their house for a lot of years and they have equity to be able to absorb those rent increases and then any sort of renewals there as well. And so they're going from like big 3 to 4 bedroom homes into those 1 to 2 bedroom apartments. And
Yeah.
so you had mentioned this earlier, John, they want freedom. They want to be able to turnkey and go. And, with the communities that we buy, they're actually able to do that. And there's not a lot of maintenance with the size of apartments. Like our apartments generally range from like depending on the number of bedrooms, but from like 600 square feet up to like 1,200 square feet in that range is where it's at. And so that's at the end of the day, it's they're getting exactly what they want. They're getting uh, in general, they're getting renovated units that showcase really well, stone countertops, super clean. The amenities, they like the dog parks, they like the barbecue stations, they like if they want to go to the pool, that there's nice pool equipment there as well, and that's well maintained, and that the property manager actually cares about them. They have that genuine love of people in them, and so these are all things that are becoming more and more valuable when with this big shift that's happening in the marketplace.
Yeah. So, for example, my mom, when my father passed a number of years ago, opted to move to a 55 and over community, a senior living community. And if that's a newer concept for you listening to this, it's basically the one area in the United States where you can discriminate based on age. So it's like if you're over 55, and so there are some exceptions to that. If an adult child is sick or something, they can move in for a period of time. But she absolutely loves it. And so there was this thought and idea that like that's where a lot of these baby boomers would go. But the reality is we are in a state of basically like shortage of these properties. And right now today, those active adult over 55 communities only make up less than 1% of multifamily inventory. And so with that kind of silver tsunami, as they say, that wave of retiring baby boomers coming, there's just not going to be enough of those out there. And so, for example, Houston actually has, or I'm sorry, Dallas has 7% of that inventory, that over 55. So I share that just to demonstrate how these Sunbelt markets are really where the baby boomers want to be. But traditional B class multifamily, like we do at Ferris Capital, can be an absolute great substitution for that because, at the end of the day, these are not, nursing homes. They're not assisted living. So there's no nursing or anything like that. It's just a place where you can be amongst your peers. And so we can still sort of offer that. And you made this point, right? But by positioning the right amenities and the right level of service that appeal to those baby boomers. So it's a real supply gap issue, and so we're
Mm.
looking to take advantage of that by offering those baby boomers something that feels really nice and exceptional, but, maybe they can't find that over 55 if that's what they're looking for.
Well, and just to give some further numbers on this, 560,000 new senior housing units are needed. Uh, and this is all by 2030, right? So that's
Right.
not that far away. And only 191,000 are expected to be built at
Yeah.
the current rates. So there's a massive shortage there. And so we just have to remember that. So if these baby boomers on average, they're selling their homes and maybe they have 400,000 to 800,000 in equity to be able to live off, because a lot of people don't have all these massive savings, right?
Yeah.
And so they want nice, but they want still affordable as well. And that's where the B class space that we go after, and that, that 15 to 1600 to $2,000 a month in rental rate, like that is attractive for this segment, for this cohort that's coming at the end of the day. So all of the shortage, they're going to need to go somewhere. And so our communities, especially their garden style, there's not a lot of
Yeah.
stairs. Like at the end of the day, they are, we'll just say, this is prime to be able to take advantage of this massive shift that's happening today.
And I always like to just kind of help out because sometimes terminology, right? But garden style are typically flat, like one level walk in units. We might have a few that are 2-story, but you don't really go, once you get above 3 stories, now you're talking about what's called a mid rise. So we're doing these garden styles. So, maybe more active, 55 to 65-year-old might not mind walking up a flight of steps, but we have those first floor options for those that maybe have, like my mom, 2 double knee replacements, right? She probably likely wouldn't want to be hustling up and down steps with groceries all the time. So, when we get into this sort of senior housing component, right? And you nailed it with those numbers, 560,000 units needed, but only 191,000 coming by 2030. Occupancy at these buildings is 88.7%, independent living over 90%. So that's more what I talked about, those active adult. But in assisted living, they're averaging around 87% occupancy. So this is a market that a lot of the capital markets are sort of taking notice of. And so it's not to say we won't see more of that active adult coming, but as a operator, you just need to be aware that this cohort is out there and ensuring you're servicing them the right way and providing those things. So Fannie and Freddie Mac, the two big institutional lenders, life insurance companies are all investing in this type of housing. But the bottom line is, it's just we're so far behind, we'll never catch up. So this is really an opportunity where, if you look at it, Mark, baby boomers hold approximately $80 trillion in net worth, and it's the largest generational wealth stockpile that's ever existed in history. And as they sell homes and start transitioning into renting, that equity can become monthly rent checks, right? And so boomers tend not to be cash strapped, they're choice driven. And from a rental demographic, you can't ask for anything better than that. In other words, they're not living paycheck to paycheck, and there's nothing wrong with that. And a lot of our residents are in that, right? And so we have a big heart for those hometown heroes, the teachers, the nurses, the firefighters, police officers. And we serve that community really well. But as an operator, when you have somebody with disposable income and they're going to pay their rent check every month, that's always a good thing, right? So we're not saying we're disregarding this group over here just to target this group over here. We're serving everybody. But this is something you need to be paying attention to as an operator, making sure you're providing what this generational cohort is looking for.
Yeah, well said, well said. And so this is why that we're going after assets in the Sun Belt. This is where a lot of these baby boomers are moving to. Like they don't want to be walking outside and slipping. Like John, actually, the one of the biggest issues of people getting into trouble, seniors getting into trouble, is a slip and fall,
Yeah.
and they break their hip and they go into the hospital, and it's just like generally within a couple of years of breaking a hip, like it is a big concern. It's a
Yeah.
real concern, and like a big part of that is slipping on the ice. It's
Yeah.
easy, right? You walk outside, and at the end of the day in the Sun Belt, you don't have to worry about that. So like spots like Tampa and Charleston, Arizona's big as well, like Atlanta, right? These are Dallas, these are areas where people are moving to because not only from a weather standpoint and from a lifestyle standpoint, but also from an affordability standpoint as well. Like, so the income to rent ratio, I mean, in a lot of cases, we're seeing under 25%. After we renovated and increased rents, they're still only paying 25% of their average income towards rent.
Yeah.
Whereas, a lot of the northern states and in Canada as well, it's like 50% and higher. And so they want to move to somewhere nice. They want to move somewhere affordable. They have money, and this is where we're purchasing these properties in the areas that these baby boomers are moving to, and it's helping fill our buildings at the end of the day, and then get higher returns for our investors.
No, it's such a good point. I mean, it's such a real thing though, but that slip and fall can sometimes be, they go to the hospital and they might not come back out, right? And so, it's a big cohort, 62 to 80. So there's a lot of, kind of variance in there in terms of, like my mom's 78 and, still helping people move on the weekends, and I'm telling her like, "Mom, chill, slow down." But she's very active for her age, but at the same time, I want to make sure she has very comfortable, a living environment, right? And so what amenities boomers tend to prioritize are the types of things we're doing. So, like our Noonan acquisition is a great example where we actually put in a walking trail. Largo having a great fitness center, community spaces, package handling. Those are the things that they're looking for. So, what's sort of cool is it's not all that different from what other generations are looking for, but that just thoughtful approach to how you're choosing what amenities to add. For example, we're not going to put in a co-working space, right? Because it's not likely something, a working class, middle class, or a retiring baby boomer is going to need. So, it's really important to not only understand the market you're in, but, and also like who's going to be the potential renters, but like what do those people actually really want, And Mark, we toured so many assets where I'm looking at a beautiful, kind of clubhouse leasing center, but it's empty. Like nobody's using the stuff. So it's like that was not you did not spend your investors' money appropriately if nobody's using the stuff. So it's really the simple, basic things that you just have to execute on really well. And another factor here too is one bedroom and two bedrooms, right? So those are the types of size units you're typically seeing this demographic want. So we're usually targeting one, two, and three bedroom, but many of ours are one and two. Georgetown being once again a great example of that, where that is the cohort that is renting largely from us. So what I would say is that, to kind of put a bow on this is that we're always thinking about risk whenever we're taking down a deal. And we're like stress testing it a million different ways and trying to figure out how we can reduce as much risk as possible because we can't eliminate it, right? So one of the ways that we're thinking about this is those baby boomers, have a great credit risk profile, right? They typically have strong income or saved equity. So you're going to have your rent checks coming in on time. You mentioned this earlier, but the lower turnover because, a baby boomer doesn't want to move every other year, or they're not likely to get another job or something that's in another market. So there's lower turnover. So that makes our net operating income, our NOI, a little bit more predictable. And even like the middle income senior segment, it's really underserved, right? A lot of those over 55 communities are quite expensive, and that's the bottom line. I mean, my mom's living in an over 55 where they're single family homes for purchase. So it's not a rental community. And she paid like 275 for that home and it's worth 560, 600,000, a couple years later. And so that area has not, been immune to that 50 something percent increase in home pricing. So, there are those baby boomers that have worked hard their whole life and they've, maybe put the money into the 401k or they have some sort of pension plan, but they're not necessarily walking away with millions of dollars in the bank, right? And so having something that's affordable but feels luxurious is super attractive. So, it's all about just being thoughtful about your operations at the end of the day. And if you're doing that, you'll probably be prepared for any generation or any type of resident that comes in.
So there you go. There you have it. You see a new wave coming, and now you have a heads up and can take advantage of this moving forward. If you would like to learn a little bit more about how to partner and invest with us on our next acquisition, we are getting closer to our next one. Go to fulloutinvesting.com and you'll find out our overall process, and you can book a one-on-one call with myself or with John. And really appreciate you guys. Hope you enjoyed the show today. And if you liked it, you can go ahead and share it with another high net worth investor that you think will benefit from it. Thanks for tuning in to the Multifamily Investor Playbook. We love and believe in you guys. Keep dreaming and investing big.